Elaine, it's great to have you back on the show. The results we got from Delta last week, how does it set us up for the rest of earnings season for the airlines? What are you watching for as we do get some of these names this week?
Hi, Morgan. So the number one thing that we're really concerned about really has to do with the summer and how traffic is shaping up, number one. Number two, what the companies think about with respect to mask mandates going away on May 2nd or 3rd, and whether we're going to have to continue testing. And probably the most important thing is staffing. Delta said that they're staffed up. They have hired 15,000 people over the last 18 months, but we know that American and United, for example, are hiring between 150 and 200 pilots a month alone. And then United had a job fair last week in Chicago where they were looking for 1,000 people. So the airlines are having the same issues that you guys have been talking about for other companies. And that's causing real capacity concerns for the industry right now.
And of course, I'm going to ask about fuel prices.
Yes.
With crude trading well above $100 a barrel and jet fuel, trading near record highs in recent weeks, recent months as well. How much of that cost can be pushed out to the consumer currently?
Yeah, so our thought is maybe 60% gets pushed out to the customer. Remember that airline tickets are generally sold 90 days in advance, right? About 60% of tickets are sold 90 days in advance, and then the rest of the tickets are sold within the month of travel. So when you think about that, it takes about 3 or 4 months just to recoup that increase. And so we're thinking maybe 60% gets recouped in the short term. But the other thing we're really worried about right now is crack spreads, especially in New York Harbor, which are $140 or around $3 a gallon, which is unheard of. We've never seen anything like that.
Helene, it's David. Back to staffing, you mentioned, of course, the need to hire, job fairs and the like. I would assume then wages are going to have to go up as well. And my question is, are they? And if so, what's that going to mean for margins?
Yeah. Hi, David. Yes, exactly so. So we're thinking that every airline, with 1 or 2 exceptions, is in pilot negotiations right now. And starting pay at American, Delta, and United is around $90 an hour for first-year first officers. We're expecting that to go over $100. And we're expecting the higher-end pilots like the 777 guys and gals who are doing $330, $335 an hour right now are probably going to get up to around $350. So you're seeing that scale move up. But then to your other point, if you're an airline like Alaska Air with a hub in Seattle where your corporate headquarters are as well, you're competing with Amazon and Microsoft for talent. So as you think about it, in order to compete and retain high quality talent, you really have to raise salaries straight up and down the board. So we're looking at that inflation in not only in fuel costs, as Morgan asked, but we're also looking at it in salaries. And that is going to pressure margins unless the airlines can recoup more of the increases in revenue. And of course, that leads to demand destruction down the line.